Hello, I am Jerry Frank and I'm CEO of Stratafolio. And today we're here with Amy Heinen from Quick Action Accounting. And we are talking about setting up a chart of accounts for a real estate company, whether it's residential or commercial. And we happen to be using QuickBooks, but the same methodology and concepts apply to other accounting systems. So why don't we go ahead and get started? Welcome, Amy.
Thanks for having me. This is a great opportunity to help business owners get off on the right foot. If the chart of accounts isn't set up correctly, then it can lead to just a disaster and a lot of time and money spent cleaning up the mess down the road.
Awesome. I'm glad we're here to talk about it then. So what are the main functions of a chart of accounts?
It provides the structure to organize your data. It's like the foundation of your business. And it provides a way to share that data with bankers or investors.
Mm-hmm.
It also helps with filing your taxes. The more organized you are, the less expensive filing your taxes will be because your accountant doesn't have to go through all your receipts.
Good to know.
And it guides in decision making. And how it does that, both sharing the reports for the banks, and it's through those reports that if you have the right chart of accounts that can tell you a story about your business, it can help you make decisions whether, in your case, a certain property is not making any money, maybe it needs to be sold. And those decisions are what help you grow your business.
So it all shows up on those balance sheets and the profit and loss, but if it's organized well, I'll be able to determine that much easier.
Right.
Okay,
Correct.
awesome. Well, let's just really start with the basics.
The chart of accounts is a list of all of the accounts you're going to use to organize your financial data for your business.
Okay.
It's split up into assets, liabilities, equity, revenue, and expenses.
Okay.
So to be sure that everyone understands the difference in those types of accounts, your assets are your stuff and things.
Okay.
So the cash, the accounts receivable, and the property or real estate in your instance are considered assets. They're things you have.
Okay.
And the liabilities are things you owe. So your accounts payable you owe to your vendors, your taxes payable you owe to the government, and the notes payable you owe to your lenders. All those mortgages in your situation.
Right.
And the equity is what you actually own. Then you move on to your revenue, which is the sales, the rental income. And the expenses are the costs that you incurred to generate those sales.
Okay.
Or weekly.
So you told me before that it's all about helping you structure your finances so you can tell a story and
Right.
continue to tell a story and figure out what your story even is.
Right, so that's in setting up a unique chart of accounts, like with QuickBooks. You can use this chart of accounts that it sets up automatically based on this industry of having a rental business. But I find it is a bit outdated, and in the process of setting up clients, I ended up editing so many transactions that it would have been just easier to start from scratch. So that's what I encourage clients to do, is skip the template that QuickBooks or the other software might use, and think about the expenses and the income and the assets and liabilities that are unique for your business.
Right, right. And so you've provided your template chart of accounts for us to work from today, correct?
That's correct.
All right, so let's talk about importing that baby.
When you don't want to use that standard or template chart of accounts from QuickBooks, you can go ahead and clean it out, which on this company file, we've already cleaned out what you can so that we don't end up with duplicate accounts after we import.
And I imagine it's a little bit different between different versions of QuickBooks.
It is, the desktop versions are all very similar. The QuickBooks Online has a different procedure
Okay,
and menu system, but
okay.
basic concepts are the same.
So if you're importing make sure you delete whatever is out there already.
It's the best idea too.
Okay, awesome.
The other thing we want to turn on is the numbering. So in the edit menu, you can go into your preferences and then under accounting, and your company preferences is where you turn on your account numbers.
Okay.
So we'll go ahead and turn that on. It doesn't matter if you turn it on before or after you import. The
Okay.
numbers still import in and they'll be there. Now to import, you go into the file drop-down menu
Okay.
and the utilities option, import, and you are importing an IIF file. And it's here on the flash drive. So we'll just double click on it and voila, there it is.
That is slick. You and I had talked earlier, I was using a 4-digit code and you suggested really it's better to use a 5-digit block code.
Right.
And do you want to explain why that is?
It gives you more depth that if your business or when your business grows,
That's right.
that you can departmentalize more. The first two numbers might be significant in assets, liabilities, equity, revenue, and expenses. But then you can use like the third digit to departmentalize if you had different types of properties. And then the last two digits can be significant to sub-accounts that you'll set up, maybe for different loans to tie your assets to your loans. If you're consistent with those last two digits, you can, it just helps you when you're recording things. It'll be like, oh, this is this asset and that's asset number 1, so it's going to be loan number 1.
Right. And so your recommendation is really to plan ahead for growth
Right,
so that you have adequate space and numbers to grow your business.
correct. And the numbers can be edited as you grow, or if you think you want to add an account in here and your OCD kicks in and you want to be alphabetical, you can just adjust those numbers, you know, before and after.
I should mention that the same IIF file that Amy has imported is also available for people to use to get started.
Right. Now, it did duplicate a couple accounts, I'm
Okay.
noticing in the equity section, because I was not allowed to delete them. So we have 2 opening balance equity accounts. It's an account that is only really used to set your beginning balances, just to give a like clearing account, and should end up being 0 in the end. So I'm gonna go ahead and delete one of them. And then we can edit this account to get rid of that asterisk that it put at the end of the number sequence, because it can't have the same number on 2 accounts.
So you're deciding to merge them?
Yes. Some of the accounts are default accounts that QuickBooks requires and categorize asset. If you accidentally record something without putting an expense, this is like the default account that QuickBooks uses.
Okay.
Then we had the fixed assets, which we've split out in dwelling or building, land, property improvements, and accumulated depreciation. Now, like we were discussing, just why we have the 5 digits, for this instance, it's to track your fixed assets by property. And we can set all of those properties up as a sub-account. So let me demonstrate that. We're gonna set up a new account. So if you hit the account drop down, then you can go right into new. And this would be a fixed asset. And this property is at 100 15th Avenue. And that's often what my clients will use, just the actual address. That's how they refer to their properties, it's
Mhm.
easiest.
Yep,
Versus putting property A, property 1,
okay,
I think using the actual address isn't a bad idea.
okay,
So we're gonna make that a sub-account of dwelling. Now, I couldn't, just off the top of my head, remember which number sequence, so I just started typing it. So those are the 14,000 series. Maybe we have dwellings in more than one city.
mhm,
So we'll have 14 for dwelling, and then this first city, we always use 1.
oh,
And then this is property 1 within that city.
okay,
So now we will, I'm gonna just press save and new, because we wanna go ahead and set up the land and the property improvement accounts, as well as the accumulated depreciation for this property.
okay,
So the next one will once again call it the exact same thing, 115th Avenue. Can't ever type when someone's watching. And it's a sub-account of land, which is the 15,000. And we'll go ahead and number it this, with this consistent numbering sequence, so it's still in the first city and the first property.
nice. And do you use the description at all for anything?
You could, if you want to put more details, maybe the entire address or what type of property.
Mm-hmm.
That is for your own use, it won't show up on any reports.
Okay,
Lastly, we'll do it. I'll go ahead and make this a sub-account. It's just good to go ahead, even if you're not planning to have any property improvements that are gonna need to be capitalized, it's a good idea just to set them up. 16. And lastly is the accumulated depreciation for the same property. So now if we look back at our chart of accounts, under the fixed assets, we have dwelling, land, property improvements, and accumulated depreciation, all with sub-accounts
mm-hmm,
for that particular dwelling,
mm-hmm,
which will help when your CPA goes to record everything into the tax system. They break it out in those categories on your tax return just the same way.
So then what do you do for the expense side of it? When you painted this new property, 115th Avenue. How do you record those expenses separately from one property to the next?
I do that by setting up my customer list by property, instead of listing in the customers, the renter or the tenants.
Yes.
I use the property name.
Okay.
And then for the expense, I reference that customer or
Property?
property. And that will allow for you to run reports by customer or by job. That will show you just for that particular property what expenses are related to the income.
Oh,
That sounds like another video.
yes, I totally agree.
Now, to be consistent, most likely there's a mortgage related to this property. Well, So if we go down here and there are notes payable, we probably want to set up a sub-account there as well.
Mhm.
So we'll add a new account again, and this time it's in the long-term liabilities. And it's the same address. This time it'll be a sub-account of notes payable. And we'll use the same unique sequencing of numbers,
Mhm.
starting with accounts payable or notes payable. And then the one was representing what city and the first property. This would be a good time to use that description to put maybe what bank or lender has the note, maybe reference the account number.
Right,
Because when you're recording those transactions of loan payments, your bank statement usually lists the loan number.
right, yep. Good suggestion.
Then we should also go and set up the escrow account. So we can track our escrow funds for that property.
Mhm.
So once again, a new. The escrow account I've set up, I treat it just like a bank account, and we actually reconcile them right to the bank statements or loan statements.
Okay,
So we will. I should have copied that. And we're not gonna set up a bank feed at this time. So now for that property, we can track everything that deals with the assets and the liabilities pertaining to that property.
okay.
There might be other unique accounts you need or you didn't need out of this one.
Mhm.
Um, I need mouse control. I'm trying to get to, that's just the beginning of the expenses. I'll get it lined up and then I'll start talking. Oh, and income. Why is it so touchy? Okay. Now let's talk about what we can do within the profit and loss accounts to make it unique and tell you that story. Right now, the only income account set up is rental income, one account.
Right,
And a lot of business owners will operate with just one account, but you might want to set up sub-accounts if the rent that you're charging your tenants, it has different components. It all ends up in rental income on your tax return,
right,
but if we set up sub-accounts, it might help you know if you're charging a certain amount for taxes and property taxes and insurance to help cover your costs. Or if you're renting commercial property, you may have a CAM charge.
correct, yep.
So you could set up sub-accounts under there, one for base rent, one for CAM. Maybe you have a fee if they have pets.
Right.
I've always wanted an office cat.
I think it's a great idea.
So you could set up sub-accounts to track how much of your revenue.
And do you set up a different, if you have, let's say you have 10 different rental properties, would there be 10 different lines under that rental income?
you could set it up that way. I actually don't, because you can track both your income and expenses by the customer list.
Okay.
So,
You can just,
okay. Where did the income go?
there it is.
Okay, start again. To add the sub-accounts for rental income, we'll just go in and add new accounts.
Okay.
And these are all gonna be income accounts.
And so this is really the way and the place for you to distinguish pet income or CAM or rental income. That's where this is how you separate that all out.
Right, and if you're going to use one sub-account, I recommend that you set up a sub-account for each component of your rent. That there's nothing actually going just to rental income. That way, all of your sub-accounts will add up on your statements or your reports to the total in rental income. And in the desktop version of QuickBooks, if you have sub-accounts, but then have some things just going to the parent account, it will put rental income other for anything that wasn't into another sub-account, and other doesn't tell you anything.
So if you break it out, this, on the P and L, you'll be able to see across your properties where you're getting the biggest amount of income, and you can track it by property.
Right,
So it really helps you tell the story of what is good for you and good for your rentals.
well, and for example, if you had a pet fee to have pets in the property, you might track your repairs and maintenance
True.
by anything related to pet
Yep.
repair and maintenance.
To see if it actually makes sense.
And then you can see, am I charging enough of a fee to cover what the costs if there's a problem with the pets?
That's a very good point.
Or I can't think of what other things might you add a fee if there's a garage?
That's true, a garage.
Or maybe if you have furnished units, you might have a premium that you add on for the furniture. So this is
Or
where you
CAM.
can add in your sub-account. Another thing you could do here is track your rent by location. We started this with that next digit being for that first location.
That's true, so you know if this particular location seems to be more profitable
Right.
or not.
So then you might be base rent and that location, but then you'll also use that number sequencing. If you were to do that, you may want to continue the number sequencing through all of your expense, which would involve many more sub-accounts to be set up, and I'd recommend doing that in Excel before you import it. You can also use other features in QuickBooks to track it by location or by using, you could turn on the class feature and then have a class for each type of. That's
So I
where-
can set this up as any way I want.
Right,
In the end, what it is for me is that when I look at the P and L, the profit and loss statement, I want to be able to see by property all the way down. My income, my expenses, and the expenses across each of those components, across each of the properties. I want to be able to compare across and down.
right. So let's open up another company that I have that's can demonstrate that to you.
Okay. So what are you going to show me next, Amy?
This company file, I've entered some mock-up transactions
Okay.
so that we can look at the end result of how we've done our setup.
Okay. So I'll see it all beautifully lined up on my P and L.
Right.
Awesome.
And another difference with this company file, we have already set up the customer center, which I mentioned and we'll cover on another video. Doesn't show you much there. With different properties. Now here I just labeled them A, B, C, D. But that's how we track by setting up the customer center as the property location, that's how we can then record the expenses by property as well.
Okay.
So I will go ahead. To go into reports, on the report drop-down menu, let's look at company and financial report and look at the profit and loss by job.
Oh, there
So
it
this
is. We have every
shows-
property lined out.
Yeah, each property, any income or expenses that were tied to a customer or a property set up as a customer in QuickBooks will now align. If we run a profit and loss for the entire company, it's going to have a different total because there are administrative expenses that won't show up on here because we don't have a property assigned to those
Okay.
expenses. And we haven't done a lot of transactions, but in this particular instance, it's only one rental income as well. So that's the report that your CPA will use for your Schedule E.
So this all happens in this beautiful, clean format when you set up a clean chart of accounts.
Right, and it's much easier if you set it up right from the start.
And I definitely see what you're saying about this story. Now I can start to see, well, I'm looking across all of my assets, all of my properties, and gosh, this property C, my net income is pretty good. Doesn't mean that's the full story, but at least I have my expenses and my revenue in a way that I can easily drill in and understand what's going on.
Right, and if we look at the balance sheet as well, which is a company and financial section. Within the balance sheet, you can also reference back, okay, property A's value, you know, the cost you spent on it would be your fixed asset original values. And then you could even compare this particular loan, or escrow, that's the escrow. You could then look at the loan on the property. So 2605 is how much you still owe for that property,
Right.
which actually that's a consolidated loan for that particular demonstration.
All right, Amy, well, this was incredibly helpful. I've learned a lot through this experience, and I can tell you from my own experience in setting up a chart of accounts, I was looking for a really good tool to help me do that. So this is very helpful. And I want to let everyone know this is Amy Heinen from Quick Action Accounting. So check out her website. And for us, if you want to check, if you like the blog, you like the videos, go ahead and subscribe. And we're also on social media. You can find us on Twitter, Facebook, LinkedIn. Check us out. Thank you very much.